A very good and cheerful morning to all the panelists and participants. Mehta and Mehta welcomes you all to the part 2 of this webinar on the topic Decoding Accounts and Financial Statements with Amendments in Schedule 3. Atul Mehta sir had some urgent work and therefore he has expressed his regret for being unable to attend this informative session. And in his absence, I take this opportunity to once again introduce our speakers and panelists, Ms. Ranganayaki ma'am and Bala sir. For those who couldn't attend part 1 of this webinar that was held last Saturday, Ranganayaki ma'am is an FCA, insolvency professional, registered valuer, member of the Institute of Cost Accountants of India and ICSI. And the several feathers in our cap are countless. Ma'am has a vast experience of more than 20 years as a chartered accountant and specializes in the areas of FEMA, GST, and valuation. After the gripping session last time, ma'am, we can't wait to hear from you this time. I'll request Bala sir to give his opening remarks on the amendments made to Schedule 3, after which I request ma'am to take over for the presentation.
Thank you, Jasmine. I don't think there is much to talk about because last time only we spoke enough how important for the company secretary to get involved in the financial aspects of our annual reports, because company secretaries are the one who's actually also equally signing along with the directors the financial reports. And again, the various financial reports, what is prepared in line with the accounting standards, they are all part and parcel of the Companies Act, and the companies are incorporated under the Companies Act and registered. And we are named as a compliance officer and also KMP, in which case it is part and parcel of Companies Act itself, which we cannot afford to ignore. But unfortunately, some or other, we seem to be thinking, many of us, oh, finance, there is a person in there, he will take care of it. I am nothing. I think that mentality or that sort of the mindset should actually go away, because we should get involved, because our job and our duty is going to ensure that company complies with all the applicable regulations which are applicable to a particular company in which we are serving. That is one. Similarly, when a secretarial auditor is certifying the secretarial audit report, he is also supposed to certify company is actually complied with the Companies Act and the finance being a part and parcel of the Companies Act, and also in the listing agreement. It is also a disclosure requirement. You may be knowing every quarterly we have to publish the limited review report and half-yearly report, annual report, etc. It's also part and parcel of LODR regulation as well. So it is from the point of view, people from employment and as well as from the practicing perspective, it is very, very important. That is what we stressed upon last session. And once again, I stress upon, let us get involved, because this is going to be our future bread and butter. That is one thing. Because we can't be aloof from the rest of the world which is moving there. We will only talk about only secretarial and the secretarial standard and other things and all. We should get involved the whole gamut of the business, because one thing is there very clearly, finance people, they are actually presenting during the audit committee. And in the board meeting, they are normally not present unless until any particular item they have been actually invited. But whereas company secretary is present throughout, right from the beginning of the meeting till the end of the meeting, understand the nitty-gritty of the whole of the business, understand the nitty-gritty of what is the decisions are being taken in all the committees, all the board meeting, etc. and other thing and all. Although company secretary is not a board member per se, but he is an integral part of the board, because no company or committee meeting can be conducted without the support of the company secretary. That is the pivotal position we are all occupying it. So with that, I pass on this to Ranganayaki. She will start her initial remarks and then we'll move on to the presentation. Thank you.
Thank you very much, sir, for the kind opening remarks. You have said maximum what could be said. We are the compliance officers. That's what we have said in the last session. Also, we are the KMP, and every command, full stop in the balance sheet and P&L and the notes to accounts and other information provided in the management discussion is supposed to be known by us. More so, the law requires more and more disclosures. The moment we say more and more disclosures, then there is a more and more information gathering, and those information have to make sense to the compiler and to the reader of those information. So there is a lot of responsibility casted, whether it is a small company, OPC, it doesn't matter. There are a lot of disclosure requirement, and sooner we get geared up to that. And if I say more than anything, now the your accounting softwares, the data capturing methodology is going to play a very important role in capturing those information which are being asked in the new Schedule 3. Because the new Schedule 3 requirement, there are a lot of information like aging analysis, ratio analysis. All these information can be captured only when the data entry at the data entry level is being done properly. We always say it is GIGO, garbage in, garbage out. If the data is captured at the input level properly, the output will come properly. So there is more and more stress to be given at the data capturing level. When we sit as an accounting professional, we also tell in our organization, in our clients' place that that half a second urgency in not feeding the full data is going to cost you at the year end compiling so much of information. So with this, we can get into the presentation. Today's session is only on the amendments in Schedule 3. As far as financial statements and the disclosure requirements is concerned. Justin, if you can put the presentation for me, it'll be easy for me to take it because I'm taking the mobile instrument. Yeah. Please feel free to stop me and ask any questions then and there. Let's be an interactive session, and anything we'll be happy to take it. So before Justin puts the presentation in front of us, let's understand the background in which this new amendments have come in. The new amendments have come with a lot of experience which the Government of India has got from IBC experience, the bank's NPA performance, the GST implementation, the government's initiative to get into several trillion economy. All these informations have gone to make India an attractive destination for investment. The stakeholders' confidence in any industry or anything will come only when the data presented to them is accurate and it is more understanding. If you see the new requirements, there are a lot of requirements which would not have been done. As a stakeholder, bank will be doing ratio analysis when they are lending funds to a company, or an investment analyst will be doing a ratio analysis and finding out how this company is performing in sync with others in the industry. But all those informations are being asked to be provided in the Schedule 3. And if there is any change of more than 25% from last year to this year, then that also needs to be explained at the time of putting the financials. So there is more accountability and transparency. So when we talk about Companies Act 2013, it starts with corporate governance. Not that 1956 didn't talk about corporate governance, but 2013 really stresses on corporate governance at various levels. So that idea of corporate governance is coming from Schedule 3. Plus, another thing is, we have always said Schedule 3 is the minimum requirement. If there is a requirement of more than that, in the various laws, that takes precedence over Schedule 3. In the sense, the minimum disclosure requirement is given in Schedule 3. If the management feels or some other law expects you to present certain information, that also needs to be presented. So, for example, in MSME presentation, MSME Act wanted to capture the amount due to small and medium scale industries, which was beyond a certain point of time, 45 days, which was not there in the Schedule 3. So it was not there in the Schedule 3, still we presented it because that particular section, a particular law asked for it. Now Schedule 3 has incorporated itself. So this we have to keep in mind. Schedule 3 requirement is the minimum requirement. So then the everything in this context has to be read with the new NEFRA coming into play. I mentioned in the last session also that there are certain reports from NEFRA, both on the financial statement quality also and on the audit quality report also. of listed companies and companies who have gone into investigation or whatever for reasons. Those reports are being there in the public domain. If you see those reports which is issued by NEFRA, we can see that the responsibility, the way the minuteness in which the financial statements are being done, the audit quality is being read, can be seen for there. In one of the AQR reports, NEFRA has commented saying that the discussion between the audit partner and the quality review partner is not available on the just when you have to go to, straight away to. So if you see that, I think there is no discussion between the audit review partner and the quality review partner. Then it is talking about the very prime discussion on independence of an auditor. If an auditor is doing in-days implementation or reviewing an in-days implementation, he or she loses the what do you call the prime concept of independence. So that is being mentioned. Then they are saying there is no links between the numbers in the audit schedule to the main schedule. So there are a lot of importance given on each and every. I just mentioned in the last session that we are in a profession wherein only our quality files, our audit files is going to explain what kind of work we have done. So if those information are not there, tomorrow for any reason, this particular file is picked up for scrutiny, if we don't have supporting information, though we might have put enough time and effort in working on that, it is not going to be helping us. So the documentation should say what we have decided, what was the discussion, what was the observation of the auditor, how it is being concluded. Why I'm saying in this context is the same goes, whatever goes for statutory audit or cost audit should go for secretarial audit also. There are a lot of things, whether something is considered as deposit or not, whether something is within the limits of remuneration or not, whether something is to be treated as loan. All those information discussion, whatever, because we have seen in some cases people taking from loans from cooperative society, their own parent company, giving, saying that the management's opinion is this is a doable loan. So such kind of discussion points have to be summarized and should be available in the audit files. Last but not the least, this government talks about more of governance rather than governance, more of governance rather than government. So those parameters have also gone into your Schedule 3 new requirements. It talks about a lot of responsibility on the stakeholder side. When new CARO came in, there were a lot of requirements to be fulfilled by an auditor to be reported on the CARO matters, on which there was no relevance or no discussion by the management. So the auditor was to mention on a standalone basis. Now the Schedule 3 incorporates all the amendments which are being asked on CARO. So if you see, management talks about certain things and the auditor gives an opinion on the same thing, whether it is conformance with what management has said, whether they have a negative opinion, whether they have a disclaimer opinion, or otherwise. That can be said. Jasmine, any issue on the putting up the presentation?
Ma'am, they're just taking a minute. It will be shared in a minute. Just a minute.
This is the background in which we are going to discuss the Schedule 3 amendments. Let's now get into item by item. Now, when you see the amendments are put in different pockets. Division 1, Division 2, and Division 3. Division 1 is for companies which are following in Indian accounting standard, that is Indian GAAP. Division 2 is for companies which is doing Ind AS, and Division 3 is for NBFCs following Ind AS. So the amendments are being put in 3 different baskets. Whatever we are going to discuss under Division 1 is applicable to Division 2 and Division 3 as well as, apart from the additional ones which have been, or the amended ones which is given for Division 2 and Division 3. So we will discuss the amendments in Division 1, and wherever we have not discussed about in Division 2, Division 3, whatever is already discussed in Division 1 will apply to them. The first amendment is on rounding off. Jasmine, we can go to straight away to slide, I think 62 or 63.
Now it is fine.
62 or 63, right?
You can go to 62 slide, I think 62
Okay.
or 63. Yeah. Okay. This is last week's presentation. It's a continuation. So the first one is on rounding off. The old company law, the old before the amendment, Schedule 3 said you may round off. Now it is you shall. You have to compulsory rounding off. Rounding off is a very, very important amendment which has come in, which if you don't take, it's in violation of whatever the new Schedule 3 talks about it. Now the challenges are how we are going to rounding off. Are we going to do it at the trial balance level? Are we going to do it at the schedule level? Or we are going to do it at the final balance sheet level? That is something we need to discuss, understand, and do on that. Now, how the rounding off is going to be done? For companies having more than 100,000 gross turnover, the rounding off will be on lakhs, millions, and and for companies having turnover below that, will be rounded off in hundreds, thousands, lakhs, or millions, whatever you want to do. Two more slides, Jasmine. Okay, one more important background of amendments I forgot to mention is the early warning sign. Now, with the IBC experience, whatever the insolvency cases the government is, the NCLT is handled, they are finding a lot of clues, certain things could have been reported at an earlier stage, and a lot of corrective actions or, whatever is the control actions could have been taken place. That information is coming in the early warning sign in form of your ratio analysis. It's coming in form of loans given to, the promoters and directors, which forms as a certain percentage of your total borrowings. So if your total borrowing is, loan given is say 100 crores, out of which 80 crores is only to your related party, then that's a early warning sign. That makes the reader of the financial statement to understand lot more than what will not be said in the balance sheet. Transparency, IDC experience, how money is being moved from one company to another to promoters' bank account. All these informations are available, and for that, all the amendments are coming in that particular perspective. Can we go to the next slide? This way. Thank you. So, what are the implications? There are too many disclosures in the accounts. Reader can understand the financial position of the company. So, generally, we say balance sheet P&L, everybody reads. What about the notes to accounts? The devil lies in the details. So the notes to accounts and the disclosure on the Schedule 3 requirement will give you a lot of information as to a company, which otherwise we would not have got it. So, that is the reader can understand a lot of information from the system. Well set up IT infrastructure required to collect data. As I mentioned, large corporates have got good IT infrastructure. They could capture whatever information they can. But what about the small companies, mid-sized companies, MSMEs, who don't have that kind of IT infrastructure? I'll give you an example. We have to give the list of companies which have been striked off and with whom the company has got certain dealings. How are we going to do it? By each and every vendor and customer, are we going to go into the list, find out whether our vendor or creditor is in the list of striked off companies? And then are we going to do, when you have a large company with the IT infrastructure, maybe in a click of a button, you get the history of the company. When was the last GST return filed? When was the last income tax return filed? Whether the company's annual filings are in order. But for small companies, how we are going to handle this is a big challenge. So the IT infrastructure is going to be playing a very important role in compiling and complying with the requirement. As I mentioned, there was too much expectation placed on the auditor on CARO 2020, which was not confirmed by the management. Now that is also being confirmed by Schedule 3, so that there is a requirement, disclosure from the management, and the auditor will opine accordingly on the disclosure or whatever is being made. I said big impact on MSME and small companies in terms of data reporting and data compilation. Next slide, please. So I've already covered this slide. The amendments are put in 3 different baskets. Division 1, which is for company following Indian GAAP, that is the accounting standard. Division 2 is for companies following Ind AS. So for listed companies and companies fulfilling certain threshold limit, Ind AS is applicable to them. Their requirement is given under Division 2. Division 3 is for NBFCs, which are following Ind AS. So as I mentioned, we will discuss all the amendment in Division 1, which will apply to Division 2 and Division 3 as well. Plus, whatever is the additional disclosure requirement discussed given in Division 2 and Division 3, we'll discuss. Next slide, Hira, thank you. So this new amendment is applicable from the financial year starting 1st April 21. So that means the balance sheet which has already been taken out or is being the process of preparation is going to have all these information. I just mentioned, whatever discussion is happening on in the amendments in Companies Act or the forms which is being filed under the Companies Act, we have to read in the context of CSC established by MCA. So I have one specific slide at the end to discuss about CSC. So we'll discuss about it when we go to that slide. And all these amendments again have to be discussed, understood in terms of new REFRA, the financial reporting quality review report, which is available in the public domain, and the audit quality review report, which is available. So what kind of expectation is placed on the financial statements, the quality of the financial statement, and what kind of quality work is expected from an auditor. So that can be, having said, NEFRA is only an additional authority which has come in. Without NEFRA also, we are supposed to fulfill a lot of requirements. But the fear of, or the fact that somebody independently is monitoring you is going to put us into limelight. But having said, if we have done our work from day one properly, NEFRA, no NEFRA does not make any difference to us. Last but not the least, the expectation from the government departments with respect to newly implemented laws like GST. The law came new. The department was understanding the law. We as a tax professional, we were also understanding the law. But the difference was, for the organization, it was supposed to be implemented from 2017. But for officers, they got 2 years to scrutinize your file. So they have grappled with the law and they are finding faults with the earlier filings, what is being done. The same will apply in case of Schedule 3 also, because today we will say, oh, no, Schedule 3 amendments came only this year. We didn't have adequate time to understand what are the amendments there. We could not grapple the way it should have been. And being the first year, pardon me, no pardoning, because if there is going to be a problem, if this file is going to be picked up for scrutiny few years down the line, at that point in time, we cannot plead ignorance or a lack of time in grappling with the new amendments possible. So with that background, we have to understand each and every amendments carefully. Can we go to the next slide, please? So the first amendment we talked about is the word turnover has been replaced with a word called total income. Turnover is generally used in a context of sale of goods. There are, sale of services also, rendering of services also. So the word turnover is being replaced with a terminology called total income. And rounding off is applicable. So now rounding off is mandatory. So if the total income is less than 100 crores, rounding off has to be done to the nearest hundreds, thousands, lakhs, or millions, whatever we decide to do. If the turnover is less than 100 crore rupees, then the rounding off, if it's more than 100 crore rupees, it has to be rounded off to lakhs, millions, or crores. If it is less than 100 crores, to the nearest hundreds, and so on and so forth. So the choice is with us how we want to round it off. Having said that, rounding off is from MCA perspective, right? For income tax, how things have to be rounded off is given in the law. The total income under income tax has to be rounded. The profits have to be rounded as per what is given under the Income Tax Act. So we cannot just blindly pick up this number and file your tax returns. Next slide, please. Next amendment is on the promoter shareholding. Till before this amendment, we used to report promoter shareholding more than 5% along with any changes. Now for promoter holding, every shareholding has to be disclosed. This threshold of 5% is no more applicable. So the company will give more information about the promoter holding, who are the promoters. Even if the person has got less than 5% holding, the fact that who are the promoters can be understood by reading that financial statement. So now the next question is, if we are going to disclose every shareholding by the promoter, what about more than 5%? The existing Schedule 3 continue to exist. So any person having more than 5% turnover, 5% shareholding has to be disclosed. Over and above, promoter's shareholding has to be disclosed fully to the readers of the financial statement. Next slide, please.
Ma'am, I had something to say over here. This would also have an impact on the other laws wherever promoters, the ICDR or any other regulation where we have promoters specifically there. Don't you think it will have an impact over there as well?
Can you repeat your question? Sorry.
Yes, so the shareholding part where after the amendment, they say that promoter shareholding has to be specifically disclosed, right?
Yeah.
So would it also have an impact on the other laws wherever the word promoter, etc. is used?
See, the definition of promoter is given in the amendment itself. It is what is the word promoter used under your Companies Act.
Right.
So whatever is there, it has to be mentioned here. So we are not considering about the law. It is given. You can go back to the previous slide only. I've just put a note there at the end saying that the word promoter is as defined under the Companies Act.
Right.
Go
Okay.
to the previous slide on this part. So the next amendment is on the trade payables. The aging analysis of trade payables is required under the new Schedule 3 amendment. And again, in the payable, there has to be disclosure between what is due to the MSME and what is due to the others. And whatever is due to MSME and others also have to be distributed in two brackets. One is disputed and the other one is undisputed. So if I have the payable to MSME, which is disputed, will fall under disputed MSME bucket. And what is not disputed will fall under the MSME non-disputed bucket. Similarly, payables to any other person will also fall under the category of disputed and non-disputed. Now the question is, the terminology disputed and non-disputed will have an impact when we are going for IBC. If a company is taking you for insolvency, many times the organization says this is a disputed payable. There are no proof. Even IBC came in. I have seen one large corporate in this country. I've sent a cyclostyle letter, standard letter to all the vendors saying that your payment is disputed, your payment is disputed, your payment is disputed. They didn't want to go to NCLT and say, this is not a non-disputed. So the fact that if it's mentioned here, tomorrow we can always say it was never undisputed one. So when it goes to NCLT, the cases could be decided off again, can be decided accordingly. And again on the payables, you have an aging analysis, less than 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. When it's more than 3 years, we have to understand when it's more than 3 years, limitation law comes into play. So, the fact that limitation law comes into play when you see the, payables beyond 3 years, then a lot of other implications could come, understanding could come from the financial statement. How much is due I need to pay? The same will, hold good in your receivable side also. If I have a receivable of more than 3 years, if I don't have a claim on it, I've lost my period of limitation, then it is as good as not able to recover it. So it is just a junk debtors lying in my balance sheet. It may not be recoverable, or it might have certain other implications, like maybe it is never recoverable at all. It is just like, so the readers of financial statement will understand how the organization is faring in terms of payable side and in terms of receivable side with this aging analysis. We had aging analysis in terms of more than 6 months and less than 6 months in the previous one, if I remember correctly. Now it is extended. So the question is, again, it goes back to if you're a MSME, if your data, bill-wise data is not fed in your accounting system, capturing the data is going to be difficult. Ledger by ledger, somebody has to scrutinize and pick up that information. So data entry, time and again, I always say, data entry has to be done in the right sense.
Not only that, the information which is to be collected in the initial stages, when we are dealing with the party, there should be a specific question. If you are MSE, please declare MSME. If that data is not collected, although we may be dealing with the MSME, we will not be having the detail with us that the company with whom we are dealing is a MSME. That will be a problem.
So that is from payables aging schedule is concerned. Can we move to the next slide?
This amendment will save a lot of time of the Honorable NCLT in deciding matters, at least. As
Yes, maybe that is a very clear intention of getting this amendment. In fact, forget about going to NCLT and deciding. Before you go, only you will understand. If somebody is trying to go, they will try to see how the matter is being taken care. So it will save a lot of time of a lot of people in the country. So the impact of this classification in IBC, operational creditors, disputed or not disputed, is identified easily. So, and the limitation time for payables, that is also being taken care. Can we move to the next slide? So the next amendment is on the current maturities of long-term borrowings. This takes me to the fundamental thing of accounting. What is a non-current asset and what is a current asset? Anything which is beyond an operating cycle is non-current. So if there are current maturities, it is as good or it is a short-term borrowing. It's a part of the form of short-term borrowing, and hence it is moved to your short-term borrowing side. And current maturities of long-term borrowings is being deleted from long-term borrowings. That's it. So it is only a presentation change, because in the last session we discussed what is current and non-current. So anything payable the next 12 months is a current, and so the current maturities of long-term borrowings fall under current liability and not long-term liability. Can we move to the next slide? This is a simple amendment which goes as per the understanding of the current and non-current. Next, we come to the asset side. On the assets, in the non-current asset side, we've been using that word fixed assets. Now, accounting standard do not use this word fixed asset. It's called property, plant, and equipment. So now property, plant, and equipment along with intangible comes under that. So the title is changed to property, plant, and equipment and intangible. So in that we have the bifurcation of what is there in property, plant, and equipment and what is there in the intangible. Now, in terms of property, plant, and equipment, if the carrying cost, or if there is a revaluation made, the fact that now revaluation is done by a registered valuer has to be mentioned on the financials. And if there is a change of more than 10%, net carrying value of each class of asset. Here the word used is each class of asset. So if I revalue the assets and I've got 4 or 5 classes in which the revaluation is more than 10%, or out of 4 or 5 classes, I have got 3 classes where I've revalued beyond 10%, one is below less than 10%. It has to be disclosed for each classes, classes of assets for which revaluation is beyond 10%. So the fact that it has been revalued, the fact that it is being revalued by a registered valuer, and the valuation beyond 10% is being done, has to be brought on the financial statement. Next slide. Now on the receivable side, just like on the payable side, we have the distinction between undisputed and disputed. In undisputed trade receivables, we have the criterion called good, doubtful, and again in disputed we have good and doubtful. Good is something I don't have any problem, I don't foresee any collection issues, but it is in certain collection time bracket. Doubtful is something, it is there the time bracket, but I have a opinion, or I find difficulty in collecting those receivables. So we are having 2 buckets of one good, and the other one is doubtful, where the provisioning could have been done in the accounts. Is being segregated. Now, if you see, the aging analysis here is little bit more than what is in the creditors. Here we are giving the bifurcation between less than 6 months, 6 months to 1 year, 1 to 2 years, 2 to 3 years, and beyond 3 years. All these numbers have to match with your total number, which is there in your main balance sheet. Next slide, please. The next change is on the borrowings. If the company has borrowed from banks and financial institutions, and if the borrowing is not used, I think there's some question. In case of trade payables, sorry, I can't, we can.
Ma'am, I'll just read it out, yes. In case of trade payables more than 3 years, recovery is hit by limitation law.
Yeah.
Since right to recovery by creditor is lost, can this item be qualified with a note or disclosure?
It can be, see, not necessarily all 3 years and above is lost claim. There are some good people who will come and pay it to you also. It is your judgment. What is accounting talks about? Conservatism. So when I'm going to see, I will be very conservative. Where I have even a slightest element of doubt, I will provide for it. When it is payable, I will keep the liability alive till such time I totally, the right to claim is being totally forgone. So more the information in the schedules or in the disclosures is merrier. So
again, when you are talking about the 3 years limitation period, the question arises here, if you are actually doing what we call the ongoing transaction with the claims. That means the money is actually being received and the supplies are being made. It is an ongoing business which is actually going on. You know, particular debt is actually left out for about 3 years or something like that. That will not be getting hit with the 3 years limitation period because it is an ongoing transaction where the money is actually kept pending. So that also has to be kept in mind actually.
And one more thing I forgot to add here is, it is from the due dates. So say if your billing is on 1st of a month, your receiver, your payable starts 30 days after that. This classification is done based on the due dates of payment. If there is no due dates, then it is considered from the date of invoicing. Otherwise, the aging analysis is to be done based on the due date. So, say invoicing was done in the month of April and 30 days was my payable time. So this becomes 6 months and above from October end, not from September 8, because my due date started from 30th of April. Was that the question, Jasmine, from the participant?
Yes,
No.
yes, that's right.
Okay. And also, I didn't complete the previous slide. Let me just finish it off. In terms when you have taken a borrowing from banks or financial institution, and if the borrowing is not used for the purpose for which it is borrowed, then the fact that it is not being used has to be mentioned, and where exactly it is being used was also to be mentioned. If you see, there is a correlation in this statement with what is said in the CARO also. Even before also, the statutory auditor used to comment where the borrowings have been made, whether the money is used for the same purpose for which it is being borrowed. If it is not used, then there has to be a disclosure from the auditor saying that it is not used for the purpose which is being borrowed. So this is from banks and financial institutions side. Again, the company must be submitting their stock statements. If the stock statement do not match with whatever is given in the financial statement in their books of account, the fact that it is not matching and the reason for it has to be given with the reconciliation statement. Because in a lot of cases, the stock statement, the data statement provided to bank have got no significance with what is there in the books. So the fact that now the reconciliation has to be done, and if there is a variation, that variation has to be pointed out in the notes to account. Plus, the same is being commented by the statutory auditor in the CARO reporting as well. The next one is, am I audible?
Yes, ma'am. Yes, ma'am. Perfectly audible.
The next one is on the title of on the property side. If the title deeds of the immovable property are not held in the name of the company, the fact that the properties are not held in the name of the company has to be given, and whose name it is being given. There is a format given under the Schedule 3. In that format, we have to say, and if it is held jointly with some third party or with some related party, who is the joint holder, the detail has to be mentioned there. And what is the share of the companies owning in that particular property is also to be mentioned in the notes to accounts. Next slide, please. This I've already discussed. If there is a revaluation, under revaluation, the fact that the revaluation is done by a registered valuer has to be mentioned. And if the valuation is beyond 10% for each class of assets, the different class of assets where the valuation is beyond 10% has to be mentioned. That's it. Next slide, please. I'm so sorry to bother you for changing the slide.
No, not.
The next one is on the loans or advances. Previous slide.
Yes.
Loans or advances granted to directors and KMP and the related parties. When I said early warning sign, this slide is one of those early warning signs. Say if the company has given, where the loans or advances are repayable on demand, or it is being given without specifying any terms of period of repayment, and how much is the loan which is outstanding as on 31st March, which is given to promoters, directors, KMPs, and related party has to be mentioned. And it doesn't stop there. What is the percentage of that loan in comparison with the total loans outstanding? So if you see this slide and somebody sees that 80% of the loans and advances is with related party, directors, and promoters, then I know how my funds, borrowed funds are being utilized or my own funds are being utilized. So this is a information which is very key in the hands of a lender in case of a stakeholder who's going to invest in the company. So this is going to make a lot of understanding and implication. Can we go to the next slide, please?
This is probably siphoning of the fund, which arose
Yes,
in the
very apparently it will come on light. Yeah.
Satyam case.
Yeah. Next slide, please. Then, in terms of this is another last week, I think one of the person asked. This is another beautiful capital work in progress. In many cases, we are some balance sheet you can see numbers sitting in capital work in progress for ages together. The asset may not have been capitalized at all. It is sitting in the garb of something else. So the fact has to be done. So if the capital work in progress, again, we have to give an aging analysis of less than 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. And the bifurcation between the projects which are in progress and projects which are temporarily suspended. Imagine I see a major capital work in progress which is lying in temporarily suspended and which is beyond 3 years. As an investor, as a lender to the organization, I know where am I heading towards, or over a period of time, how my funds are going to be used or going to be done. That information is available on the face of it. Next.
It is basically a window dressing, because once you call it work in progress, it attains the different colors. If it is actually a finished goods, it will straight away go to your balance sheet. It is actually coming as a closing balance.
Yeah, that's correct.
These are tools where it becomes so easy for anybody to identify it. It's like a particular disclosure in that respect.
Correct, correct. Next slide, if you see, much more interesting. Among these suspended projects or projects where there are cost overruns, you have to give the bifurcation of project 1, project 2, project 3. These numbers have been totaled and it has to match with your main schedule. So transparency, corporate governance is there in a disclosure, which helps the stakeholder to take decisions the way they deem fit to take it. Next slide. Same thing goes for what to get for a capital work in progress will apply to intangible. Intangible is another one major area of concern if it's not monitored properly. So there also we have to give the aging analysis of less than 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years between the project in progress and project temporarily suspended. Can we go to the next slide? Again, among the suspended or cost overruns between the bifurcation of project between project 1, 2, and 3. Next slide, please. So that is also given in the disclosure, which is again an apparent information for the reader of the financial statement to decide how he or she wants to take inference from. Next slide, please. This I've done. Next slide. This is another interesting disclosure. Details of Benami properties, where the proceedings have been initiated or pending against the company for holding any Benami property under the Benami Property Transaction Prohibition Act. Then the details have to be mentioned. Which property, how much is the amount, who are the beneficiaries. If it is not appearing in the books, the fact that it is not appearing in the books, if it is there in the books, it has to be related to their main schedule, which asset is that, and then whether you are an abater of the particular transaction, the company is being declared as an abater for the transaction, that has to be mentioned, and what are the nature of proceedings against the staff or the company's view on that particular asset has to be there. This is another a very important corporate governance slide. Benami property. Many times, I think last week, sir just mentioned, properties are in the name of somebody else for ages together. It is never transferred in the name of the company. Those facts will, because these are again the experience which has come from IBC. The RP is going to sell the property. Property is not in the name of the company. There's a lot of issues in taking possession of that property, selling those property. All these issues are come in the forefront, and those things have been taken adequately in form of disclosure requirements under Companies Act. Next slide, please. This I just discussed. Borrowings from banks and financial institutions. If it is borrowed and used for a specific purpose, no problem. If it is not used for the specific purpose for which it is borrowed, the details have to be given. And if there are a stock statement, or data statement provided to bank, a reconciliation of quarterly statement which is given, and if there are material discrepancy, The reasoning for the material discrepancy has to be given. This is being again commented by the auditor in the Caro reporting. Similarly, the Benami one is also being commented by the auditor in the Caro reporting. Next slide. If a company is declared as a willful defaulter, this is again a very important information in the hands of the stakeholder to understand the nature of the company, the mindset of the promoters, or the background in which the current functioning of the company is on. So if a company is being declared as a willful defaulter, then the fact has to be mentioned, and who declares on a bank or consortium of bank in accordance with RBI guidelines, a company will be declared as a willful defaulter. If that is being declared, then the fact has to be mentioned. Now, one question is, if a company is not declared as a willful defaulter, or if I have not reused the funds anywhere, should there be a declaration? Can I keep quiet? In my opinion, the answer is no, because the fact that it has not happened, you have to say no, not applicable or not done. Otherwise, it amounts to the forfeit. So, a better practice to disclose those information. This is a very important slide to do with the company secretaries. Relationship with the strike-off companies. So if the company has got payable, receivables, or they have invested in the company, or their shares are invested by a strike-off company, or any other outstanding, the fact has to be mentioned. So name of the company, what is the relationship for this particular transaction, how much is the balance outstanding, and relationship with the strike-off company, how it has been related has to be mentioned here. So all these facts have to be brought into light. As I mentioned, this is going to be a challenge for a small company and MSMEs. You have to go a data mining of all your receivables, payables, and all your relationship and find out who is there in the strike-off companies or not. Okay, if you're regularly dealing with the company, money is coming, going, so you have no problem. But if it does not come, or if there's some reasons, we need to look into that. If it's a related party company, then you have no problem. You yourself will know this is the situation. But in case of an unrelated party situation, this needs to be dig deep into the data. This becomes easy in terms of, as I mentioned, large corporates, when they do vendor registration, the system as such, when you put a SIN number or a GST number or income tax number, when you do the vendor registration, it automatically goes to the respective portals, does a search and comes back and tells you. But that kind of facility may not be available in a software like a Tally or Zoho or something. But possibly because of these changes, those software will also get upgraded, and possibly they will give you the information. But as of now, there is a challenge over there. Registration of charges or satisfaction. I always say registration of charges and satisfaction of charge is a very, very important thing. You might think it is just another documentation filing. It has got huge implications if it's not done in time. Somebody could have lent on the same property without me taking that into consideration. So if the company has not filed the charges or the satisfaction of charge, that has to be mentioned in the financial statements, because it's a very, very, very important disclosure. The law gives you a window to file it after a certain period also, but that is a very risky scenario from a lender's perspective. Next slide, please.
Okay, even in the past also, when 1956 Act was also, this was a big problem. Big problem in the sense, what happens when we take our money from the financial institution or the bankers, they used to appoint the nominee director. After the loan and other things are repaid, etc., the nominee director will actually give the letter that he is actually resigning from the office because the loan, etc., is repaid, etc., and other things. And everything is no. But unless we get a letter from the financial or the institution or the banks stating very categorically the loan has been fully repaid, it was not possible to file the satisfaction of the charges.
Correct.
So there used to be a gap between the time the loan is repaid, the nominee director is actually stepped down from the board and getting the letter. Yeah. Because I personally faced the problem myself in getting the letter from the particular organization. Almost about 6 months it got actually delayed. ROC taken the action. The matter actually went to the CLB that time. When the CLB went to that time, we told, what can we do? We tell us, If the company, the people are not issuing a letter, in spite of writing so many letters, so many reminders, etc., and all things, what do you expect me to do? This is what it has happened. So that's sort of
The
the
one is letter. In some cases, letter is there. To sign the digital signature and send, give it to you takes ages, from bank side. These are the practical issues. I do agree with you. But having said, registration of charges and satisfaction is the important function which needs to be done in time. Yeah. Next slide, please. If there are any compliance with other laws and the disclosure, see if there is a scheme of arrangement which is being there, whether it is executed as per the scheme or if there are any variations that has to be mentioned, deviations have to be mentioned. The disclosure as to compliance with number of layer of companies. If the company is not fulfilling that number of layers of companies beyond that particular layer, the fact it has to be mentioned, and the relationship with the holding companies in the downstream company should also be mentioned. So this is again a very important requirement in terms of how the funds are ultimately used. There is one more requirement here. I'll just take you there. That will further explain what we are discussing. Next slide, please. Financial ratios, which we have discussed in detail in the last session. There are about 11 ratios which have to be mentioned. Some on the profitability side, like net profits, return on capital employed, return on equity, and return on investment. On the liquidity side, as the current ratio, and on the turnover side as inventory turnover ratio, trade receivables turnover ratio, trade payables turnover ratio, net capital ratio. And on the solvency side, we have debt equity ratio and debt service coverage ratio. We have picked up all those key ratios which will identify in understanding how the organization is doing or is going to do. Last week when we discussed, they said, closing number may not be a significance or may not give the sanctity as to the ratio. In most of the ratios, we are doing it on average. So it is opening plus closing. Again, when I say opening plus closing, it's last year's closing and current year's closing. But having said that, it will indicate certain amount of things which are happening in the organization. What is used to calculate the denominator and what numbers are used to calculate the numerator should also be explained along with the ratio. So if I say current ratio, it is current assets by current liability. What is there in the current liability has to be mentioned in a column, and what is there in the current as a liability should also be mentioned in the formula. So in the sense, what all is being picked up to arrive at that ratio of denominator and numerator has to be taken. And if there is any change in that ratio by more than 25% as compared to previous year, then the reason for the same has to be explained. The challenge is, if you are working with MSMEs, they will not give you any explanation. They will ask you to write it yourself. But when it is to be written, the reason has to make sense with what has happened in the organization. So in the process of writing an explanation, you will try to figure out what has happened in the last 1 year, which has made you to be better off than the previous year. So that is on the financial ratio side. Next slide, please. This is a very, very crucial requirement. Here, for example, a company A is given loan to B and with the instruction to give it to C. So the ultimate recipient is C. When in your preparing the accounts of A, you do not know that the ultimate beneficiary is C. Similarly, if A borrows from B and B in turn is borrowing from, so when a company is lending or investing, so if a company gives it the instruction to ultimately to give it to somebody, the fact has to come on record. So how my money is being routed through my related party or unrelated party to such. So I am giving to somebody with the instruction that it has to go to somebody. That somebody balance sheet is not with me. The fact I have given it to that somebody ultimately is not coming on my records. So this is being now asked to be a declaration. So this is both on the borrowing side and on the lending side also. How do you ascertain this? Management will say, I've not done anything. I've given money to my subsidiary and my subsidiary is the ultimate beneficiary. But when you pull out the subsidiary balance sheet and see how the fund is routed, it might have gone to somebody else. It might have gone to some LLP. It might have gone to some company in which the promoter or a director or somebody could be a related party. So that fact has to be mentioned, and this is to be commented by the auditor, not in the Caro reporting. This is what is the change which has taken place in the prime audit report, in the phase of the balance, the normal audit report. This change is there. So if the company has given something like that, the auditor is supposed to take a declaration from the company who are the ultimate beneficiary, and whether the ultimate funding is in compliance with PMLA and other exchange control laws. That declaration should also be there. So the auditor will take those declarations and make his or her own observation as to whether the facts mentioned by the board is in conformity with what is happening. So here there is certain amount of data mining which is required by the auditors when they are commenting on the. So they have to say whether they find anything contrary, or whether they find anything which is not in sync with the declaration given by the management. There is an element of subjectivity. This is going to be a tough exercise, but having said that, this has to be done. Next slide, please.
In fact, Ranganayaki, if
Yes,
you remember, in the related party transactions, when it has come in the financial some years back, they used to declare what is the parent company, subsidiary company, and associate company, and other companies. The regulation actually brought in that you need to declare the ultimate holding company.
Yeah.
People were not declaring the ultimate holding company, some or other, ultimately, who's the ultimate beneficiary, which was not known at the one end. Now the same thing, they have actually widened the ratio, not only in the top level, even at the bottom level. Correct. Who's going to be the ultimate beneficiary?
Yes. See, law is catching with the dynamic change in business world. They brought in a number of layers. They brought in first, declaration on related party. Who are the related parties? Even if you don't have transaction with them, list all the related parties. Then who are your, number of layers? The law is also trying to catch up with the dynamic business world. That's where we have a problem. So in this, compiling with the requirement is what is a challenge.
Yeah, you are absolutely right. Much before the layer is,
yes, sir. Sorry.
Much before the layer has come.
Yeah.
In fact, what people do is people used to get the money borrowed from the parent company, and it used to be the subsidiary company. And again, they used to establish what we call downstream companies, and the money used to be actually passed down.
Yeah.
That was there. Ultimately, nobody knows where the money actually goes. That is what they are trying to plug up by doing all these things.
And to be honest, if you see sit with documents of several companies, you find this rampantly used by organizations after organizations after organization. And when they land at the doors of MCLT for an insolvency, the poor RP goes and explains certain things. Some case RP is unable to unearth, forensics have got some evidence, ultimately you're not able to hold them. Ultimately, it's the taxpayers' money in many cases which is being lost. So that's where, the sense of, again, corporate governance has to come in, and all the professionals associated with the organizations have to chip in and ensure that, ultimately the public funding is being protected. Yeah. Next slide, sir. Yeah. That's as far as the balance sheet part is concerned. Now let's go to the P&L side. Any questions so far from anyone?
At least chat box, nothing is there. Any participants, you have any question, you can put on the chat box, or even if you can speak also. Yeah. So far, nothing is there.
Yeah. So from the P&L side, I just mentioned, the word turnover is being changed to total income. And in the total income, you have the bifurcation. If a company is a Section 8 company, if they have received any grants or donations, then that has to be disclosed separately. And if the company is offered any income under, say, a voluntary disclosure scheme, then the fact that it is not offered, if it is offered, it has to be mentioned here. If it is not offered, then why not, unless until there is an immunity for not offering, then that needs to be mentioned there. So there's very minimal correction or amendments as far as P&L is concerned. Next slide, please. This is on the corporate social responsibility. This is one dynamic area where we are trying to get information or understanding of the law. As we, it's a dynamic one. We are trying to keep pace with that. So what is the amount that is required to be spent by the company during the year? That has to be mentioned. What is the amount which is being incurred? What is the shortfall at the end of the year? And how the previous year shortfall is being, what is the total previous year shortfall has to be disclosed? And why there is a shortfall, the reason has to be explained. What kind of CSR activities has been done has to be explained. In that CSR activity, what are all the details of the related party transaction has to be mentioned. And movements in provisions with respect to liability incurred into entering into contractual obligations. So if there are any movement in the provisions made, then that has to be done. So CSR is one area where they are looking at as a very, very important compliance. So we have this form CSR coming in, we have to file the documents. So even from the recipient side also, they are supposed to file their, the CSR one and take their registration. So CSR is going to have a lot of implications in future. It's a very important area and area with huge scope of practice for a professional.
That is going to be the case because what happens, there are two aspects here. One is, it is talking about what is the amount is to be contributed. Generally, what we are doing, the money is to be sent during the year. That is what they do. But normally, many corporate, it is an experience, what they do not spend the money actually in the beginning of the year or even in the middle of the year. They probably wait till close of the year and they contribute actually towards the close of the year in order to have the better cash flow with them. But the thing is, law made it in such a way, all right, no problem. You have contributed is one part it, but whether the money for which you have contributed, whether it has been utilized for what purpose, what is the status, what is the utilization, what is the carried over, again, the same case, what you have given project wise, what is the project, what is the period of the project, what is the project over and what is the project is not done, why the project is pending, all those disclosures are being asked now in the CSR. Because especially the CSR amendment which has come very lately, as you rightly said, registration of CSR, getting the CSR registration number and utilization of the report, etc. And again, project not spent for years together, etc. All those details are called for. It is definitely going to be, government is seriously looking the money really for which it is contributed, it is being utilized or it is being misutilized. Because we keep on seeing lot of NGOs which are there in the TV news. Every other day something is coming, NGO collecting the money is going somewhere else for the personal purposes. It is not being utilized for the purpose it is.
And they have enlarged the scope of your CSR activities also. They have asked you to contribute straight away to this and be done with that. The options to contribute without getting into hassle is also given to us as an organization. So both the supply side and the demand side is being taken care.
Yeah.
Next slide. Any cryptocurrency or virtual currency, talk of the town, after this budget, where a company has traded or invested in any cryptocurrency or virtual currency during the year, the following information have to be disclosed. What is that? What is the profit or loss which is done during the transaction in this cryptocurrency has to be mentioned, and how much of currency is held at the reporting date as on 31st March. If the company has borrowed or lent, advance money for this particular trading activity, then the fact that, who has borrowed or, who has lent that money has to be mentioned on the financials. So more transparency, more disclosure requirement for cryptocurrency and virtual currency is concerned. Next slide, please. This completes your division 1. As I mentioned, whatever is discussed in division will apply to division 2 and division 3 with whatever modification we are going to talk about for or additional requirement for division 2 or division 3. In division 2, as I mentioned, it is for companies which are falling Ind AS. So in Ind AS, this financial liabilities is now carved out separately because it was not there on the face of it. Now they have carved out and put under financial liability. Lease liabilities has been brought in. Otherwise, it was going from forming part of the grouping. Now it has come to the main schedule. Next slide, please. In case of this is a very important change. statement of changes in equity is applicable both for division 2 and division 3. If there is any change with respect to prior period errors, then the fact, you can go to the next slide. The fact that, how much is the difference and what is the closing balance has to be disclosed. Can we go to the next slide, please? And again, for lease liabilities, again, we have that lease liability. And for loans, we have security deposits is now coming under, the other non-current assets. Bank deposit, which was held for more than 12 months, comes under non-current. I just started last session only saying that anything which is beyond 12 months is non-current, and hence bank deposits. This was actually being done by corporates, not that it's something new they have gotten. Only in terms of disclosure requirement they have gotten. Any bank deposit which is held for more than 12 months comes under non-current assets. Next slide, please. We'll just see the statement of changes in equity. These two columns which is mentioned in red are the additions. So if there are any changes in the equity share capital due to prior period error, that has to be mentioned. After that adjustment, whatever is the restated balance sheet at the beginning of the current reporting period has to be mentioned. So these two are the new additional columns which is being inserted in the statement of changes in equity. Next slide, please. Again, receivable side, same kind of aging analysis. Only difference is the receivable measurement is different from accounting standard to Ind AS. So here we distinguish between good and doubtful. Again, we bifurcate between undisputed and disputed one. In case of undisputed, we call which is good, which is doubtful, and where there is a credit impairment is there. That is a separate clause which is monitored. The auditor signing the balance sheet will do this particular measurement, and then they will put the figure accordingly. So we can go with the numbers. Next slide, please. Yeah. Now, as per this completes with the division 2. In division 3, as I mentioned, it's for NBFCs which are following Ind AS. They have a extra disclosure in terms of certain ratios. That is their capital to risk weighted assets ratios to be mentioned. Among that between Tier 1 CAR, Tier 2 CAR, and liquidity coverage ratio. These additional 3 ratios have to be mentioned in case of companies following Ind AS NBFCs. That's it. Next slide, please. I just mentioned in the main auditor report, there are certain amendments this year. So this completes our Schedule 3 disclosures. Any questions? We'll be happy to take it up now.
So far, nothing is there in the chat box so far.
Yes, sir.
Yeah.
So next is on the main audit report. So other matters in the audit report. Here we are going to talk about reporting regarding the advances of loans and investment other than disclosed in the notes to account. So if there are anything that has to be mentioned. The next one, what I mentioned, receiving of funds or further lending or investing other than those disclosed in the notes to account, that has to be mentioned. So if there is any lending or advancement which is not there in the notes to account, that has to be commented upon. And the comment on the representation received from the management, on which if the auditor finds any material misstatement or he does not find any material misstatement, has to be mentioned in the main audit report. Then dividend declared and paid, whether it is in compliance with section 123 of the Companies Act, has to be mentioned. The last one is still not into place. Comment on the use of accounting software for audit trial. So the companies were supposed to start their audit trial from 1st April last year. That got postponed. Even it has got postponed. Even this year, it is not applicable. So if the company has enabled those audit trails, the comment on that has to be done. Whether they have done it or not done it has to be there. But that's not applicable for this year. So as far as this year is concerned, 2 additional clauses in the other matters in the audit report. One is on the borrowing and lending to the ultimate beneficiary, whether the funding is all in compliance with PMLA and other FEMA compliances, and whether dividend declared and paid is in compliance with section 123 of the Companies Act. Yes. Okay, we go to the last slide of this session. as I started saying that, everything has to be read in sync with NFRA, read in sync with CSC. When we file MCA forms, at least in the last few months, there are certain search reports we have seen, secretarial search reports, which finds a lot of, non-declaration, wrong declaration in several forms, which is filed with MCA. So we have to understand now, just like a CPC under Company Income Tax Act, we have a CSC under the Companies Act. So the CSC's job is to pick up the form which is filed on STP mode and forward their findings to the concerned jurisdictional ROC. And the respective jurisdictional ROC might or will, qualify those forms to be a defective forms, and they will initiate action. So what will happen? We have to file the form afresh with, the additional fees and whatever fees applicable within 30 days of given. The no opportunity will be given to us for the resubmission or rectification of the defect. So it is going to be a fresh filing. So we have to understand the implication. This is on whatever is filed on the STP mode. When it is something is filed on, yes.
Not only that, when you are talking about the resubmission, the period till the resubmission is actually made, the smart ROC will actually take it for granted. During that period, you are actually under the non-compliance, and they will issue left and right the show cause notices, adjudication notice, and you will be penalized. That is what it is actually seen in the recent past. More so, we are saying in Gujarat state, actually, very recently it is happening. And more or less, it is also happening in Karnataka. Now it is actually coming in Delhi also.
Okay, so that is the state of situation in which we are functioning. So how many of our forms have been filed wrongly or captured data wrongly or, is not filled in? So those implications will come and fall on our head. For STP mode, that was a scenario. What is on non-STP mode? Then the ROC will send you the notice and give you an opportunity to rectify the same. The form has to be rectified within 15 days. This forms can be picked up for 8 years. The time limit for which they have the scrutiny is 8 years. So that's going to be a major impact on the industry and the profession where what we are practicing. So with this background, we have to read all the amendments, all the changes, and the expectations from the regulator, from the corporates on professional like us, and then we have to discharge our responsibility accordingly.
Not only that, the practicing people, oh, what is that? The company has done a mistake, I have certified. That stand is not going to work any longer. Because first and foremost thing is, company has done an error, it's okay, but what have you certified?
Yes, sir.
That is what it is actually coming. As you rightly
In
said.
fact, first thing will come on our head, then we'll go to the company.
Yeah. That is what it is actually going to happen. Now what happened more and more, it is coming just because company is prepared, I have gone through it, I have no role to play. That is not going to work anymore. It is going to, okay, company is prepared, they are the primary guilty people. But what have you done while checking? What have you actually checked? Have you just blindly ticked off and signed, or what have you checked?
And we are seeing a lot of forms which is being certified blindly also, sir. So that's the situation.
No, that is what I'm saying. Because you see, as I told you also last session also, I actually shared in one of the cases which I brought to the notice actually, a practicing company secretary has been issued the criminal proceeding against him because of the certification of the form saying that you are just certified. He actually tried to justify the show cause notice. No, company provided the resolution. I gone through the resolution. Prima facie it appears to be okay. That is why I certified. But the question has been asked, have you actually gone through the minutes of the meeting? What is written in the minutes of writing? What is the intention? What has been passed? Have you thoroughly checked? Is it not your duty to check the minutes of the meeting? That is where the question has actually come. Still the case is going on. I don't know what is the final outcome is going to be. We have to wait and watch.
That's true. So this is the background in which we have to read, understand, reread, re-understand the provisions of Companies Act.
One more thing is there. Luckily, I can say rather, the people who are actually following the financial year as their accounting period, they have got another breather period of 8 to 9 months. Because the amendment says it is what do you call the financial year starting on or after 1st of April 21. So that people who are actually the financial year, they have the time the next year only, not the current year. That is the issue. Okay, it will be applicable to April to March, but January to December, yes, you have a little more time actually to do it. And the bigger task, as you rightly say, smaller companies, it is going to be a very, very complex situation because the comparative figure for the last year.
Yes.
That is where the problem comes, because we are not prepared for that. Okay, current year it is all right, amendment has come, etc. And all this thing we are generating, we are doing it. What about the last year? How do we actually go to generate? What is the thing? How you are going to rely upon? That is a big issue, especially to the smaller companies, MSME companies, etc. And all, that is the issue.
So with this, I think we are at the end of the session. Thank you so very much for a patient hearing, not for one session, for 2 sessions. Sincere thank you from my side. Yeah.
Yeah, participants, any query, anything you have at this particular time before we call it a day? If anything is there, you can put up your queries, or even you can raise a hand and you can speak also. We'll be glad to answer. No? Okay, Ranganayaki, I'll tell you one thing. Although I am a qualified cost accountant, I've been working as a controller of accounts for years together, but that is what you call yesterday years. It is not the current years actually. So really speaking, I keep on reading, I keep on understanding, but the thing is, more of the things it get enlightened for me, at least to my benefit. I am sure it will be equally the same for the other participants as well. It is so nice of you. You put everything in the very capsule form, and you actually very nicely explained. You actually classified your presentation in such a way, explain nicely what is division 1, division 2, division 3, classifying the companies, what are the highlighting the things with the multiple colors, because the presentation is going to be available to the participants as well. You have done a wonderful job, Ranganayaki. My hats off to you actually. I must acknowledge you for the wonderful job done by you and sharing your valuable knowledge.
Thank you. I think some participants have asked for the presentation. It is available.
Yeah, no. In fact, it is a procedure that after the end of the session, what we do is we actually share the presentation, and also the recorded sessions are available on the YouTube. That is one thing. Achha, one more thing is there here. I think, Madam, now the Division 1 companies are required to round out the figures mandatorily, but AOC 4, AOC 4, CFS still required absolute amount to be filled. Will AOC 4 be updated by MCA?
Sorry, I didn't get the question, sir.
They are talking a filing of the AOC 4 and AOC 4 forms, that is financial statements, which are actually filed by the companies. So the participant is actually putting up the query. Now you are saying the financial figures has to be rounded. What about the AOC 4 and AOC 4?
Sir, I have a very different view on that actually. This I have been discussing with a lot of people at various forums.
Yeah.
AOC 4 is nothing but the extract of your signed audited accounts. What is there in AOC 4 has to replicate in, what is signed in the balance sheet has to be replicated in the AOC 4. The only difference is AOC 4 figures in rupees, to the last number, whereas in the balance sheet you have rounded off. Say for example, you have 1,50,253. You would have got 1,53,200 or 300 in the balance sheet. The same number has to be multiplied and put it in the AOC 4. This is my personal view. Some agree, some don't agree. So that is for.
No, you're absolutely right. Whenever we are rounding up, when the AOC 4 are still in rupees, what we have to put, we have to add that correspondingly 000. We have to put it in that. That's all.
This is what I've been saying in every forum, sir. But there are other opinions to that. But my opinion is your audited accounts and AOC 4 cannot change. It has to be same. It could be different for income tax, but not for AOC 4.
But probably I would expect, because still there is a time is there, probably the AOC 4 form will get modified to tune what is the rounded off figure. That's what I think.
Correct.
That we can expect actually.
If that comes, nothing like it, it solves everybody's problem. If it is not rounded off, then you multiply by whichever rounding you have done into put it so many zeros in the numbers and file it.
You're absolutely right. But MCA normally issues this sort of amendment only in the last minute. So it will come. The people who want to file it early, they have to multiply by the respective.
In fact, one professional told me that she has put a explanatory letter saying that this has all been rounded off and put it. So I said, yeah.
Anyway, we can wait for the amendment. Otherwise, as you rightly say, I agree with you. That is what my understanding is also.
Okay.
Madam, there is one more thing. There are a lot of people, they are expressing their thanks to you. There are many people who are actually saying your in-depth analysis and the insights of the presentation, it is very much appreciated. There are more and more appreciations are actually coming from participants. Somebody is actually saying very, very informative sessions. Somebody is saying very in-depth session. Somebody is saying very significant presentation. All those compliments which are actually coming to you, which I have to show really your wonderful job of knowledge sharing.
Thank you very much, sir. It's my pleasure to be in this a big forum. Thank you very much.
Jasmine, your last word, anything before we call it a day? I don't know whether Jasmine is there or not. Okay. Thanks. Thank you so much. Thanks, participants. Yes. Presentation will be shared to you, or the recorded session will be available. Have a good day. We will meet yet another presentation the next Saturday. I think probably next Saturday we'll be taking up on a small company. Thanks a lot. Thank you.
Good day.